Welcome to another riveting edition of Risk and Return. I'm Charlie Gasparino from Fox Business, Fox News, columnist for the New York Post, with my partner in crime, the one and only, the granddaddy of data, Bob Sloan, the chairman, the CEO, the king of S3 Partners, uh, the number one independent data provider on the Bloomberg network, and probably the best positioning tool you will ever find if you're a trader, an investor, and trying to navigate through these markets. It's a godsend that Bob came up with the concept for this company. And,
Amen to that.
and it's still, after all these years, it's still kicking ass. And as his actionable calls show, and as the copycatters, I mean, there has been some ripoffs of your stuff, right? I mean, am I missing something here?
No,
What the fuck?
you're not. I mean, this is,
Who are these people?
I mean, honestly, a little credit, please. We've been
Imitation,
talking about this.
sincerest form of flattery, they say, Bob, but it still sucks to be ripped off and not credited. But we're here to remind the world where some of this stuff comes from first. And we're going to get into that a little bit later, have you take some victory laps and get into some of your actionable calls. I do want to say that, I'm going to get into Michael Saylor's travails with strategy and what that means for the crypto markets. And there was a really fascinating piece in the Journal earlier in the week. But when I'm reading this thing, it's from an old friend of mine, Jonathan Weil, one of the best sort of accounting reporters around. He knows balance out stuff left and right. Much of that stuff was signaled by you months and months ago, and we'll get into some of that. I did put a call into Mr. Saylor. I did hear back, but they haven't then followed up with their answers to the questions. But if they do while we're on this podcast, I will we'll break it on the podcast. But I do have very serious breaking news, Bob, and it's coming from Sun Valley, the summer camp for billionaires, for media moguls. They're all there. My boss is there, Mr. Murdoch, Lachlan's there, Bob Iger's there, Josh D'Amaro of Disney, David Zasloff, who just sold Warner Brothers for a cool $80 billion to David Ellison, who's there. I hear Brian Roberts is there, with both executives that are part of his broken up company now. Remember, Brian Roberts is sort of the controlling shareholder and king of Comcast, and now it's two companies officially. It's not just Versant. There are three companies, not just Versant, which has the cable operation, CNBC, MS Now, you name it. But now NBCU is going to be, the big broadcaster is going to be spun off. And then Comcast is going to be a separate. The cable operations is going to be separate. And a lot of people thinking he's at Sun Valley to do deals. Although we'll show you why. Someone told me who's attending. I want to get this straight. I just saw Brian and he looks a little depressed. And we'll get into that in a minute, but this is the huge breaking news. 2:30 Mountain Time, which is about almost now, right? 2 hours difference. We're 4:19 here in New York time. There's an important event at Sun Valley. Knitting is being a knitting class at the Lodge Lobby Atrium. Now, you would think that these guys are billionaires and they're really, they really need, up-to-date information about the world. And, that you would think they would have their secretaries, people running in with little notes. Hey, Trump is bombing Iran again, which he is, right? But here's what they did today after lunch. There was a 12:30 tea time. There was a 1:30 fly fishing, meet at the Silver Creek Outfitters. Then there was an hour of hiking, meet at the activities desk. Here's your favorite, Bob. Tennis and pickleball at 1:30. Then there's something called trap and skeet. I think that's shooting, right? Yeah, it's at the Sun Valley Gun Club. Then mahjong. It could be a tiles game. You're better at this shit than me. You're also better at Pilates than me, because that comes next, Pilates. And this is what I would pay to see you do, Bob. Knitting at 2:30. Just now, the knitting class, in 10 minutes, the knitting class will begin. I do have a text out to David Zasloff to ask him if he could hurt himself knitting, might stab himself with one of the with one of the things. By the way, just so you don't think, just so you think this isn't this isn't moving in moving towards a more effeminate approach to, no, just so you don't think that it's all just very, moving towards a feminization of Allen and Company's famed media conference. After knitting, there's something called hardcore fitness. And then there's horseback trail rides. And then at 4:00, yoga. And then at 6:30, cocktails and dinner. This is why you go to Sun Valley. This is why the big, great deals of all time, like the AOL Time Warner deal that blew up, or the AT&T Time Warner deal that blew up. All these great deals go down at Sun Valley because of yoga and knitting. On a serious.
By the way, but if you keep going, you just might get what you wish for. You might have to participate in one of these events next
No,
week.
yeah, that's true. By the way, it does start bright and early at 7 a.m. And here's who spoke early. Mark Andreessen and Jeff Bezos were interviewed by Brett Baer, my colleague at Fox News. Brett's a great guy. I know Mark Andreessen a little bit. He's a decent guy. I do not know Jeff Bezos. Satya Nadella was interviewed by Reid Hoffman. Reid Hoffman, as you know, is the very left-wing LinkedIn CEO, right? Right? Not exactly a fan of Mr. Trump's. And then Ken Griffin, the Citadel chief, was interviewed by Andrew Ross Sorkin of CNBC and the New York Times. I understand that Griffin went through his contretemps with Zohran Mamdani, the leftist mayor of New York, how he stood outside his apartment and railed about Ken Griffin needing to pay more taxes as a way to sell his ridiculous petit tax, and putting and basically very dangerous because, in this sort of very, very troubling environment, you just don't personalize stuff like this. But Ken Griffin talked about that, and again, kind of reiterating some of the same themes he went through in at Milken, saying how he was creeped out and scared, and it was basically the same thing. But so tomorrow, that's today. Today's like the first real day. But here's where things really get heated up, Bob. You're gonna love this. This is tomorrow, Thursday. Don't you wish you were there? So, breakfast at 7 a.m. Then there's a panel called Education Reimagined. Could you imagine that? Education Reimagined. What do you think might come out of Education Reimagined? As fucked up as the U.S. education system, is it
well, replacing the teaching methodology where most of our high schoolers don't read at the grade level that they're in, right?
So you think
that would be a reimagination. That would be nice. It would be nice if everybody read at their grade level.
You think that the bankers, but why would they call it Education Reimagined? It's so stupid. It's so like, why don't you just say, listen, our education system sucks and let's fucking fix it. Okay.
Let's fix it.
By the way, at 9:40, the Middle East. Wow, there's a big piece of land to cover. There's a lot of shit happening in the Middle East. So I wonder what's going on there. They give that about a little more than an hour before they go into an interview by Aron Burnett of CNN, good friend of mine, interviewing the Pennsylvanians, both their senators, John Fetterman, I would say heterodox Democrat senator who bucks the party line a lot on a lot of things, including Israel and the Middle East, and Dave McCormick, who I believe was a private equity executive before he ran and successfully became the
well, he was at Bridgewater for a long time. So
Bridgewater, right? So
Bridgewater. More investments than
more investments.
Probably some private equity.
But then you have lunch. By the way, lunch is at the duck pond. Golf.
I gotta tell you, I love when like the 8th grader comes out and you with his.
By the way,
I just love it.
At the duck pond.
I love it.
If you missed any of the activities today, for example, if you missed knitting, you could come back tomorrow at 2:30 and take a fucking knitting class. But
people must like knitting.
And before hardcore fitness, there's something else. They're doing sculpt and strengthen.
Well, hardcore fitness would be like
Then
what?
that's afterwards. Then it's imagine Barry Diller throwing around weights in hardcore fitness.
Dude, what you do is hardcore fitness.
I know, but I mean, I'm just saying. And by the way, then there's yoga again at the end of the day. You could bring your mat, Bob. And then right after yoga at 6:30, dine around cocktails and dinner. By the way, an invitation is in your conference binder. Buses depart at 6 p.m. That's what you get at this famed conference, Bob. It is riveting stuff. It's as riveting as Risk and Return, if you ask me. You
We do a lot better than knitting.
could you imagine? Like, I could just see
It's a
like
low bar, Charlie. It's
by
a
the way,
low
I could
bar.
see Zasloff like knitting, right? And then Brian Roberts knitting and saying, "Hey, Zasloff's like, hey, I got $31, and you had to break up your fucking company. And by the way, you look like shit, Brian. No wonder your fucking stock is stuck at 23, even though you broke it up. You announced it at 23, it's still 23. Fuck you. I hope you stick yourself with your knitting needles. What do they call them? Knitting needles?
Knitting needles. I mean,
By the way, what a complete. Listen. I have to like alert the audience here, Bob, and let them know that I have a little bit of a grudge for the Allen Company conference.
you don't say.
I'm a little
You
jealous
don't
that
say.
my
You
colleagues,
don't
like
say.
Andrew, they invite Andrew or Sorkin, they don't invite me. As a matter of fact, the one time, once I went there, they tried to throw me out for doing my job. This is like the least media-friendly media conference in the world. It's like, you gotta see these security guards. I mean, it's just you can look this up. So, full disclosure, I got it's a little bit of a grudge. But, Bob, this sounds like an immense circle jerk. No?
Well,
I know
you
they
know
might be
what?
your clients at this thing, but I mean, you don't you know.
Listen, a lot of deals I'm sure come out of it, whether they're good or bad, it doesn't matter.
A lot of them suck.
Any
Let's be
excuse,
fair.
but by the way, any excuse to have the owners of media together,
Knitting.
it can't. I know, but who's really knitting? Not a lot of people knit.
Oh,
Maybe
I
they are. I don't
no.
know.
By the
Who
way,
knows?
knitting is therapeutic. Have you heard that?
It's something that's on my list of things to do.
I'm sure that and yoga.
Well, don't knock yoga. Yoga's actually good for you. So, knitting, I don't know.
Anyway, Brian Roberts is there. This the head of Comcast, as I mentioned before, and he doesn't look too good. He looks a little depressed, and that's what one guy said.
Right. Maybe they're
And
knitting. Maybe they're knitting. Green and red arrows, and they're showing it to each
maybe
other.
he's just
I
He
don't
might
know.
be just jet lagged because, by the way, getting to that fucking place. Now, I'm sure he goes on his private jet, so he doesn't have to worry. But when you're a schlub like me getting there, you got to stop at Salt Lake City. You got to transfer here and there. And then when you get there, it's funny. They want you to cover them, but they treat you like shit, Jared. You can't go here. You can't do this. I'd rather just break their balls from New York and from my bar stool at Ilios, tonight.
Well,
you know,
first of all, you're going to be eating better food. That's
that's true.
that's
Oh, and the
that's
food
number
is
one.
good there. No. I'm gonna no.
Really?
There's some really good restaurants in that town. There's a really good rustic restaurant that just grills steak and fish. It's delicious. I can't remember the name. I actually met Clint Eastwood there one year. And
And
he
and
he was sitting there, and he looked really, he was
and what did the
I mean,
man with no name have to say?
2 years ago, and I said, "Listen, I just want you to know I saw your movies," and I said something like, "My mom really was at the hots for you." He goes, "All the ladies did," Something- which is true. My mother loved Clint Eastwood, just loved him. You know what I'm saying? Um, and that's so far. That's all I got on Sun Valley, other than knitting. Brian Roberts don't look too good. Griffin took a couple shots at Mondami, which he should, which we should applaud him for. Griffin did mention his record. Apparently, it's astonishing returns over the last 25 years, apparently. So, he does bring a lot of stuff. Citadel is a pretty amazing firm. I mean, Griffin started it from zero, and it's this huge empire right now. It does market making, and it does hedge funds, and So it is pretty amazing, and he's done very well for himself, worth about $58 billion. He does not deserve to be made the face of Zohran Mamdani's class warfare bullshit. And I think he got at that. Before we go to your stuff, Bob, I do want to mention I've been doing Michael Saylor, the head of strategy, is now coming up a lot. And I just want to say that in terms of his sort of existential control, I guess you might say, of the Bitcoin market, he owns 4% of all the available coins out there. MicroStrategy is an interesting company, and it's, used to be a software company, I guess. And since he's taken it over, it's more of like a Bitcoin hoarding company. And, the metrics are, if he buys Bitcoin with his stock, as long as the stock is propped up, I guess, above the price of Bitcoin. Do I got that right? Everything is hunky-dory. But when the stock starts to be valued below Bitcoin, and that happens often when Bitcoin falls in value, then he's got a problem. He's got to sell some of his Bitcoin to buy back some of the stock to make the metrics work. And he recently did that. He sold some. And this is one of the headwinds, I would say, to the crypto market is, having like this sort of guy that's Michael Saylor. I'm sure he's a smart guy, and I sort of comment from him and his people. They've received my questions, and they know what we're doing here. We're raising. They have not come back to me. I told them don't get back to me at the last minute, and so we'll see what happens. If they get back to me while we're on the air, I'll bring it up. But you were the first to warn about this, even though the Journal wrote a nice piece. You said it. This thing could be real problematic for crypto right now, and it seems to be. It seems like you nailed it, and you nailed it months ago.
Well, it's not just me; it's the team here too. We've seen these things before where firms go out, they raise a bunch of dough, they reinvest into an asset that's related to what they do. So in other words, Saylor goes out and buys a bunch of Bitcoin. That the stock price related to the company goes way, way, way higher than the actual price of Bitcoin, the implied price of the, and so, now he's below his break-even threshold. I thought his break-even threshold was like 70,000, and Bitcoin is hovering around 60,000. So he's got negative carry, right? He's got to fund all the instruments that he borrowed to go buy the Bitcoin in the first place, and now you got a funding deficit. You got to go raise more money, or you got to sell stock to keep your commitments current. So these things happen in financial markets every so often. You're able to borrow money super cheaply because the markets are so red hot, and then you deploy that capital, and there's a yield involved. And we asked CZ about it, we asked Jim Chanos about it, we asked a lot of people about it. We said the same thing. Eventually, when funding markets dry up or the price of Bitcoin falls, he's got an asset liability problem. And that's exactly what's happening. It's not that difficult to understand. So a lot of people say, hey, the guy's a genius for pulling this off. I tend to say anybody that can go in the capital markets and raise 4 or 5, 6, I don't know how many billions of dollars they raised in the convert market. Some of them at zero coupon. Does that make him a genius? It makes him certainly understanding the market he's in better than anybody else. But now it's turned. And now it's his turn, right? He's got to be creative, inventive on the way down, just as he was on the way up. And we'll see.
Hang on 1 second.
Yeah.
No, it's not. It's not Mr. Saylor. I thought it was.
Oh, okay. So he's got, he's got to figure out. He's got a couple holes in his boat, and he's got to figure out how to bail the water out and keep it afloat. Now, if Bitcoin all of a sudden he hits the tape and says, "Hey, I'm not 4% of the marketplace. I'm 3." Well, you could see Bitcoin at 20,000. That's his problem.
If Bitcoin went to 20,000, that would wipe out a lot of wealth.
It would.
I mean, because people got into this at 120. There was tons of speculation.
Tons
So
of
last
speculation.
time it traded at 20,000 was in 22.
Well, we did
No,
this
no,
back.
no. Well, yeah, it went down to 30, 21. Yeah, we had a crypto winter where it went to 18, something like that.
18.
20.
That's why I said 20. I mean, I don't have the exact charts in front of me. I just remember going down.
That was the FTX stuff right there.
That's right. So those are the technical levels, and when things happen like that, things tend to retrace to their technical levels. That's the bottom. That's the bottom.
You think that's the bottom? I think so too.
It is, but look, he's a very inventive guy. People believe in the asset. Funding markets aren't totally shut. He could still wiggle his way out of it.
Yeah, he's smart. He's a smart dude. And
Very smart guy.
Let's just say we hope he does, because we don't want people to lose money. We want people to make money using S3 data.
Correct. And but in this particular case, well, you know what? Next week we'll do something on like IBIT.
Okay.
And the short interest in IBIT and
explain IBIT a little bit, Bob, for the uninitiated.
Yeah, it's the ETF. It's the Bitcoin ETF.
Okay.
And we can go into that next week. We should have probably done it this week, but we didn't prepare for it. We just, I don't know. Well,
there's no, I mean, there's always another week for crypto. It's not going away.
Yeah, this is not going to happen. Like, it's not a make or break thing today.
Yep. So I do have a call into Saylor. If he gets back to me, we're gonna go with it. I find it fascinating. I just find crypto fascinating because especially Bitcoin, because Bitcoin in many ways is the sort of bellwether, right? These other ones are kind of also rans. Even if you discount for the fact that Ethereum, the people that are doing Ethereum are really smart technical people, and they're trying to do a lot of stuff on the blockchain. It's still, they haven't really captured the zeitgeist as much as Bitcoin still does. I got one more headline, and I guess we should go back to Sun Valley a little bit. Like, why is Brian Roberts looking like crap, according to my source? And by the way, I have a call into them too. Let me see if they got back to me. Is it true he looks like crap? I can't imagine they're going to answer that, but they haven't gone back to me. We raised.
Excuse me. Does your boss look like crap right now?
I did ask.
That's investigative journalism at its finest.
No, I did say yes. I said I hear he looks a little depressed. Why is that? And so, I hear he's like the deal that he kind of wants to do, this Charter Communications, which is a rival that in different markets, which would kind of scale up Comcast on the cable side and give them some scale in wireless, which they desperately need, right? To compete as a distributor in this environment. They're not even close to the three big big players in 3G. But apparently Charter has a ton of debt. I mean, we're talking about $100 billion in debt. And it's buying, I think it's buying, it's going through its own corporate restructuring. I think they're buying something. What are they buying? Are they buying, not Cox? They recently bought something. And the numbers kind of don't work out that well for that deal either, from what I'm being told. So don't expect a Charter, even though the shares popped on 10% last week when they undid NBCU, when the rumors were ripe, and it makes sense sort of conceptually that they'll go and expand in distribution. And with Charter, I've been told, like, too much debt. I don't think it's. Listen, I don't think it's never going to happen. I just think it probably ain't going to happen now. Anyway, so I just want to throw that out there. And shares of Charter have, shares of Comcast have been off, but shares of Charter, we should point out, let me see what they are. They're down today. Over the last 5 days after that pop, right? Last Monday, let me see, 1 month. Let's do 1 month. Yeah, after that pop, they've been down. Yeah, pop on the 29th when they announced the spinoff, when they announced the Comcast spinoff, meaning of NBC, meaning they might have people who theorize that they might have currency to buy Charter. Shares have been down since then, and significantly so. So when we after the 10% pop, you got like pretty much of a big, pretty big decline after that. So market's starting to discount that deal for the reasons I laid out there, and that's the guidance I've been given. Again, I'm not saying it's never going to happen. It could happen tomorrow. I mean, these deals do happen, and they're in Sun Valley, where I'm sure 10,000 bankers are up their ass trying to pitch this stuff. But
Sure.
it's kind of what I've been told. Okay, so take it for whatever it's worth. Speaking about taking stuff for what it's worth, and it's worth a lot, let's hear some S3 magic.
So this week we have a bullish pick on Pepsi. Which announces tomorrow before the opening. The short interest is up 46%. You can see that in the blue line. You can see the price has bounced. And generally, when you see a rising short interest and a bouncing stock price, that's usually a bullish signal in our models. So we have a bullish call on Pepsi. That's our pick of the week. One of the things we should go talk about, there's a lot of economic news out of China this week. Really, some of the weakness that is in the Chinese economy, they've been in the third year of a deflation spiral. Real estate's been weak. There's just a lot of things have been not going the Chinese way. And if you look at a lot of the we like to look at Hong Kong equities as a proxy for the Chinese economy. Short interest is up 49%, and your long positions grew just 9% for active long. So short, way rate increase way above the long active longs. And what you have now is interesting. This could be a tinderbox. You could see this market take off. You have a rising short interest, obviously a crowded trade. You have active positions that have withdrawn from the market. And if there's any sign of life in the Chinese economy, you could see the market set up right here for a tinderbox. Shorts, any type of bounce in the marketplace, shorts will cover, and the active long managers have to get in. So that's a pretty interesting chart for us. And if you go a little bit further, you can see that the shorts actually press their case. You can see that in the blue line. You can see how, the market returns fell, and all of a sudden, as there's a bounce, you can see that in the lower right-hand corner. And stock price, you can see also that the short the shorts were covering. So you have the right framework for how these markets could actually take off. As China seems like it's going to exit 3 years of deflation. So keep your eye on that. That's an interesting market to take a look at. The next thing we've got is we love this stock, Wanker. We love this stock.
What is it called?
I told you. We love this stock. It's now the locals in Hong Kong call this stock Wanker. Now
Wanker.
Yes, anglicized. It's Vanke, but that's not how it's pronounced in locally. They call it Wanker.
Is it a wanker? I mean, does
Well,
it
yes,
do its thing?
yes, because it had just had a government basically a government a government official was seconded, meaning put into the company to manage the company. So you can see how the active long shares have basically been at no one's really playing in this stock. You can see the black line there. and this goes back all the way back to 2017, you can see how everybody knows that this is the new Evergrande, right? This is the new real estate bubble popping. This is the Shenzhen developer that overdeveloped. They have all these empty office buildings and
Do we have Wall Street exposure to this one?
well, it's a good question. I don't know in terms of what kind of loans are made to this company. That I have no idea. But all I do know is that you're seeing the short interest rise precipitously at the end of 25 into 26. Cover based on the fact that everybody expects some kind of government support for this company. So
so the Chinese are going to step in. Gotcha.
Yeah, no, the Chinese are definitely going to step in. This is Evergrande Part 2. There's government support, a lot of short covering going on. So keep an eye on the stock because it is a proxy for real estate problems in the Chinese economy. And I think people could get very bullish if they think that the government is actually going to come in and prop up these companies. Next thing. The memory rally has been pretty astonishing. The short positions in the memory stocks, just look at the short interest on SanDisk and Micron. People selling into strength. And we love talking about the Z-scores, the increase in Z-scores, meaning historically high compared to its own history. Take a look at those stocks. It's telling you that, the DRAM ETF was down 25% from its mid-June peak. Following Samsung earnings, we got Hynix, the South Korean stock, is going to be listed this Friday, which is going to be a $1 trillion company. Just keep an eye on the memory stocks because we're seeing a lot of fresh conviction from the short sellers fading a lot of the market rally and stepping on the gas as some of these stocks fall.
So is there any play here with the Korean stock market
Well, that's where we're going next.
Okay. See, I'm not that stupid.
No. So what's fascinating here is if you look at the South Korean market, both the long and the short exposures really exploded over the past year. So active longs are up over 200% year-over-year. Shorts are up 128%. But you'll see in our chart, you can see that the blue line is the active short interest. The black is the active long interest. The long interest is chasing the short interest out of the stock market.
Oh, interesting.
Right? You see the gap at the very end. It looks like a bit of a dragon's mouth there at the end. The people are just crushing the shorts out of the market. And you can see it was step for step as the longs increase, the shorts increase with it. Now, all of a sudden, you're seeing some capitulation by the shorts. So maybe that's maybe they're ahead of the U.S. market, right? So right now, what you're seeing is exactly what happened in, let's say, November, January, even in March of this year. You're seeing shorts and longs lockstep with each other. You saw then a little bit, short interest out increase the longs. Let's see what happens in the U.S. market. If you look at this spread, this probably reverses itself.
You think so?
What we're saying is it's basically the same sector, just in a different country with a different investor base. So who's right? The U.S. investor or the South Korean investor?
I say the U.S. investor.
That's what we think. But that's what we think. So that's why we show this, because this is it flies right in the face what's happening in the U.S. market. We can skip the Kospi, and we got one last chart we want to go over to this week, which is stablecoin.
Interesting.
Yeah. So if you look at and
a stablecoin, as you know, is comprised of U.S. securities, right? Treasuries, right?
Yes, it's treasury-backed Bitcoin, basically.
Right.
and or treasury-backed crypto, however you
Right.
want to
However you want to put it. Right.
right. So the USDC stablecoin now has a market cap of 16 billion, and it's taking away market share from Circle and Tether, which have been the stablecoins of choice. So if you look at Circle, for example, the short interest, it's up, right? I mean, it's up somewhat. Okay.
Right.
What's fascinating is that the active longs are 2.5 times the shorts, even though the stock is down 19%.
That's interesting.
Right. So people are not, the way this would happen, and the reason why this is happening is because shorts are still there. You see it's pretty flat, but and longs are increasing, but the stock price is still down. So it means basically whatever passive investing is in there is out of it, or is getting out of it. That's what's putting pressure on the stock price. So we think this is pretty interesting because it shows that the duopoly of Tether and Circle may be breaking.
That's interesting. Now, there is a movement away from Bitcoin to these stable coins.
Yeah, because you can use them as you can use them as collateral. They're a safer store. You can use them for trading purposes. People, they're an acceptable form of trading collateral.
Right.
And there's a use for that.
Okay.
So that's what we got this week. That's
Oh, I got something else, Bob, before we finish. You give me a weird look. Like, what has he got? What am I getting in trouble for?
No, no weird look.
I'm literally in the middle of a text pissing match, okay, between Aron, the CEO of AMC, and Rich Greenfield, the very volatile tech analyst. Right? I mean, I'm in like in the middle of this fucking thing, and they're both going back and forth. It kind of, I don't know. It's like Aron is mad that Rich Greenfield put out a sort of a chart that talked about how much dilution has gone down. There's been a lot of dilution, let's face it, of AMC.
Well, you talk about it every week, and no one likes to hear it, but that's what happens. So okay,
and but when he says it, he basically makes the point that he's overstating the dilution. And Greenfield comes back and tells me, well, he's full of shit. I'm not overstating it. And I just mentioned this because I don't know. It's like I got to read this is all over text, so it's hard to like understand. Sometimes if I was doing a real interview, I'd be able to sort of unpack the logic, both sides. I can't. It's harder to do it. I'm going to try to do that tomorrow. But what I told Adam, I said, does it really matter? I mean, you did do a lot of dilution. But he says it does matter because it's we're coming back, and the stock was up today. It's by the way, they've had a pretty good run over the last couple of months. They've gone from $1 to almost $2. It's up today to $1.90 on talk of better box office. So they've come back. $1 though, according to Greenfield, is really, or $2, let's just say, is really 20 cents because they did a reverse split. Aron would say, Aron would say, well, it's not really 20 cents. It's more like 40 cents because the calculation of that of a reverse split actually comes up to 5-1 as opposed to 10-1. And again, stuff that you really need to sit down and have both of them explain. I would love to get them both on the show, but it is kind of one of the more interesting dynamics right now. AMC is up.
Wait a minute. How can they be so far off? 10-1 to 5, 5-1 is like a huge difference.
No, what Adam says there was some other financing that they did, and
he's basically saying the analyst doesn't know what he's talking about. His work is flawed. His work is flawed.
And Rich says, he's full of shit.
He's full of shit.
He basically says Here's the thing. So in combination, okay, so it is true that in 2022 we gave all AMC shareholders a gratis 1-for-1 share dividend. At first, they got preferred units that were converted into common shares at the time of the reverse split. So the combination of the two, the 5-for-1 reverse split, is not 10. So the combination of the two was a 5-for-1 reverse split, not a 10-for-1. Do you get that?
Yeah.
What? Explain that.
He's just basically saying there's less dilution.
Okay. Because of this preferred as opposed to the.
He's saying that the treatment of the preferred gave it less dilution.
Okay.
Without the numbers in front of me,
That's what I'm saying. I can't do it.
I'd be able to do it in my head, but I'm just
And then
saying.
he goes on. This means Greenfield's chart should start off at 20 million shares, not on 2020, not 10, which means his multipliers are off exponentially. It is not the first time Greenfield has reported about AMC incorrectly. Aron. So I asked
he's saying both the numerator and the denominator are wrong. And so
right. So I asked Rich, just so you know, I sent him that. He goes, the irony is massive dilution regardless. Look at where he sold his stock. Remember, Aron did some insider sales, I think, when it was trading at 43 pre-split. So that would be 430 or something like that. Or 30s in the 30s, which pre-split would be whatever it is, not depending on who's math.
It depends if it's 5-to-1 or 10-to-1.
Yeah, no. But he did sell not everything, but he got a chunk of change. And then he says, look at where he sold the stock. Oh my God, he's right. So 20 million shares versus 10 million. Who the fuck cares?
Well,
honestly. And then Adam says, I care.
But anyway, that's fine.
So what do you think of this?
I think we should have like a lightning round with like a 5-minute lightning round at one of our shows, and just have them go at it and see what happens. Take it off the text and come on live. We're doing it live anyway.
I'm gonna invite him. I'm gonna say, listen, I'd love to get you and you guys on, and explain like these numbers. We'll do it for next week. I just when we hang up, I'm gonna say, you want to come on my podcast next week? It's called Risk and Return, and I do it with a guy named Bob Sloan, who's a very nice man, unlike me.
Very nice man.
And we'll just let you guys.
We'll go at it. Yeah, hash it out. All right, so, guys, if you're listening, that's an official invitation from both parts of the show. Please come on next week.
And we'll let
probably
you. We'll just tee it up and let you guys go at it.
We'll let them go at it.
You remember that? Remember 60 Minutes back in the day? At the end of 60 Minutes, the old 60 Minutes, they had
Sure.
Jane, you ignorant slut. Remember that? No, that was the Saturday Night Live parody of it.
But it was like that.
Remember, it was Jane Alexander and a guy named Kilpatrick, who was Brian or David or something like that. He was a longtime journalist. By the way, he was a graduate of my school, University of Missouri, and he became a big time Washington columnist. And they would go back and forth and yell at each other. And so then Saturday Night Live did it between Jane Curtin,
and Dan Aykroyd.
And he would say, "Jane, you ignorant slut." Yes. I would love to see that.
I'll tell you what. Without getting into that, we can next week have these guys on. Let them hash it out.
I'm going to invite them.
All right, let's do it.
I'm going to invite them. So, Bob, I think we'll end it there. We've had a productive 45 minutes to an hour here.
45 minutes to an hour, yeah.
And maybe I'll see you at Ilios tonight. Maybe not. You have an open invitation anytime.
Thank you, my friend. I got to
more important things to do than hang with me.
No. But I got something I can't break.
Yeah, you got real people to talk to. I got you.
Listen, we had a real dinner last week.
Oh,
that was a real dinner.
That was nuts.
That was a real dinner.
That was nuts with Chris Ruddy of Newsmax, and
that was a real dinner.
That was bangers at that table, dude. Let me tell you,
there were some bangers there. No question about it.
God. I mean, they're all friends with Trump. I mean, that was just wild, golfing buddies and shit. Oh God,
It was fun.
it's fun. Oh, by the way, before I end, I want to tell you that I got a text from our mutual friend Jay Clayton, who tells me that his replacement starts at the U.S. Attorney's Office like now. He just put out the announcement. SDNY James M. McDonald rejoins the office as Deputy U.S. Attorney and will begin to oversee the work of the office during Jay Clayton's confirmation process. Remember, Jay is now going to be, if he's confirmed, will be National Security Chief, I believe, right? Taking over.
The Director of National Intelligence, yes.
National Intelligence, NSI. And so
that would be such a great thing for this country.
Well, because he's intelligent, especially. I mean, Jay Clayton, we should point out, long time securities lawyer, head of the SEC, did bang up work at the U.S. at the Southern District. I mean, cracking down on all sorts of crimes, everything from white collar to even like drug crimes and quality of life crimes where the federal government had to be involved. He did a great job. And Trump in my view, made a very good, and I know in your view as well, made a very good choice here. Anyway, good luck to Jay on this confirmation hearings. My guess, if there's any justice in the world, he flies through. But this is a crazy environment with a lot of political gamesmanship. So who the hell knows?
We need intelligent people in that job.
Yes,
you couldn't think of a better candidate to fill that seat.
I'm right with you. With that, on that note, I'm going to end it here. This is Charlie Gasparino from Fox Business, Fox News, with my partner in crime, S3 Partners, CEO, chairman, founder, the granddaddy of data, Bob Sloan from S3, signing off. See you next week.